Hey guys, how's it going? Today we're going to be analyzing the portfolio of legendary value investor Seth Klarman. Seth Klarman is the billionaire co-founder of the Baupost Group, which was founded in 1982. They started with around $30 million in capital, and today they are managing around $30 billion. So in 38 years, they've gone from 30 million to 30 billion. That's pretty good. Their strategy is essentially fundamental value investing. This means that they determine the value of a business and then only buy stock in that business when the price is less than what they think the actual business value is worth. The Baupost Group has around 30 to 40 positions in their stock portfolio. However, the biggest 5 positions in the portfolio make up around 50% of their portfolio. So some of their positions are highly concentrated in single companies. Seth Klarman is famous for his book Margin of Safety, and in his own words, margin of safety is only buying when there is sufficient room for error. In his book, he defines value investing as the strategy of investing in securities, be it bonds, stocks, or real estate, trading at an appreciable discount to intrinsic value. So the key points behind his strategy is determining the value of an asset like a company and then only buying shares in that company when you think that the price of the share is less than the actual value of the company. And knowing that value investing is Klarman's strategy and he only buys companies when they're undervalued, we know that if Seth Klarman has recently bought into a company, there's a very high chance that this company is actually undervalued and could be good potential for a long-term investment. So now that you know what Klarman's strategy is, we can now focus on the different holdings that he has in his portfolio and analyze them and see which ones could potentially be good investments for today. Through the 13F filing, we can only see around $8 billion that the company holds out of the actual $30 billion. This is because $8 billion is in stocks and the rest is probably in cash, real estate, and bonds. So this is the most up-to-date information that we have on the portfolio. And just to remind you guys, this is actually from Q3. This is from July, September, and August. And unfortunately, we have a delay of around 45 days, so we don't actually know what he's done in October or currently in November. As we can see, eBay makes up around 17% of the total portfolio with a value of around $1.5 billion. Next up is Liberty Global, and this makes up around 12% of the portfolio. FOXA is next with around 8% of the portfolio. We then have Viasat, which is a very, very interesting company that I'm super excited about, and I'll definitely tell you guys a bit more about that later. Next up is Viacom with around 5%. And then Pershing Square holdings at 4%. There's around 36 holdings in the total portfolio, which is actually quite a lot. In this video, I'm only going to be focusing on the top 6 positions in the portfolio, as these positions make up around more than 50% of the total portfolio. And we can get most of our information about Klarman's most concentrated and high conviction holdings by just looking at these positions. And what is super interesting is with these 13Fs, we can actually see when they first bought the holdings, and we can actually estimate the average purchase price that Klarman has bought some of his holdings for. So for eBay, for example, he started buying in Q4 of 2018, he bought around 21 million shares at a price of, my best guess price of around $28 per share, and I found out this price by just looking at what the price was between Q4 of 2018. He then continued to buy in Q1 of 2019. He sold a bit of his portion when the stock went up to around $40 per share in Q3 of 2019. He then has continued to buy and bought a lot more shares, around 12 million shares in Q1 of 2020 at an average purchase price of around $29 per share. Today, the share price of eBay is around $48 per share, and Klarman's average purchase price is around $29 per share. He recently sold around 6% of his position in eBay in Q3 of 2020 for a share price of around $52 per share. One really important thing to realize is that usually the biggest positions in a lot of these fund managers' portfolios is the biggest position because it has increased in value a lot since they've bought it. And this is kind of the case with eBay. eBay is up around 60% since Klarman actually started buying eBay, even though eBay could potentially still be undervalued today. If we were to buy eBay today, we'd buy eBay at a price of around 60% higher than what Klarman actually bought it at, and this could potentially reduce our returns for the long term. So one important thing that we really want to look for is we really want to look for the companies where Klarman has been buying these companies consistently, and today we can buy it for a price that is very similar to the purchase price that Klarman paid for, or even lower than the purchase price that Klarman paid for. And one of these companies is actually Liberty Global. He started buying Liberty Global back in Q3 of 2018. He first bought around 10 million shares at around $26 per share. He then bought another 18 million in Q4 of 2018. He's continued to keep buying even until Q2 of 2020, and his most recent purchase was around $17 per share. So he's been consistently accumulating more shares in Liberty Global, which is a really good sign. The prices have been going down substantially from around $26 to now around $22 per share. He keeps on buying because he keeps seeing it as a bargain deal. That's what these really amazing value investors do. They don't get scared when the price drops. They keep on buying more because they know they're getting a better deal for their company. They can buy more of the company for a cheaper price. The average purchase price that Klarman has been able to buy it has been around $22 per share from my estimates, and the current share price today is around $21 per share. So Liberty Global is a holding company that owns a bunch of different broadband companies throughout Europe. They own Virgin Media in the UK. They own around 60% of Telenet in Belgium. They also own UPC, which is another broadband company in Poland, Switzerland, and Slovakia. And they also run around 50% of Ziggo, which is another internet provider in the Netherlands. They have revenues around $11 billion, and they generate around $4 billion in operating cash flow and have capital expenditures of around $2 to $3 billion. So they generate around $1 billion in free cash flow. The main issue with the company, and one of the reasons why the company share price is down considerably, is due to the fact that they have around $24 billion in long-term debt. Also, telecom stocks in general have been going down quite substantially over the years, just because there's a lot of competition. The industry is changing quite fast, and there is a lot of regulation in the industry. The good thing about Liberty Global is I have read their recent quarterly report. Their revenues for this year have been relatively stable, even with the coronavirus pandemic. They've actually added a lot of customers this quarter, and it's been one of their best performing quarters in a while. The investment thesis for this company is that it's definitely not a high grower. It's not going to be growing at 10% a year. But the investment thesis is that this company could potentially be undervalued because of the negative perception that is surrounding the company, and it could be a good turnaround company that could potentially be revalued in the future. Just as a disclosure, I do have a small starter position in this company as I keep doing more research. I've bought in at around $20 to $22 per share, just to let you guys know, and I'm going to keep doing more research and potentially adding more into the position. The other largest holding in the portfolio is Fox Corporation. To be honest, I'm not too interested in Fox. I haven't done a lot of research on the company. It is around 8% of the portfolio for around $750 million. And he has been consistently buying Fox since around 2015 Q3. And he has an average purchase price of around $25 per share. However, it is important to note that he has sold around 24 million shares, which is around 50% in Q1 of 2019. And he's also recently sold 350,000 shares in Q3 of 2020. This could be a potential sign that he doesn't believe fully in the long-term prospects of the company. Personally, this is something that I'm avoiding. This next company, Viasat, this is a company that is super interesting and it could be a really incredible opportunity. So Viasat is a satellite internet company. They launch satellites into space, into geostationary orbit, and then from there, these satellites, they provide broadband internet into different parts of the world. They work with government contractors, they work with commercial clients, and also residential clients. Klarman has been buying Viasat ever since 2008, and he continuously still buys. Even in the most recent quarter, he bought around 2 million more shares for a purchase price of around $39 per share. The share price has dropped substantially from around $90 per share, mainly due to the uncertainty related to COVID. I've read their annual reports, I've listened to the quarterly calls, and COVID actually doesn't have a huge impact on the company. They do have some clients in the airline industry. Performance in that industry is down a little bit, but it only makes around 10% of the company's revenues. The company is expected to launch 3 new satellites into geostationary orbit in 2021 and 2022. These 3 satellites will be able to cover North America, Asia Pacific, and the Middle East and Africa. And the addition of these new satellites could be very good for their revenues, and they could help the company expand quite considerably. So over these 12 years, Klarman has actually made no money by investing in this company. At some point, he bought it around $67 per share, and initially he was buying it around $21 per share. So the average purchase prices are actually $35 per share. And today the share price is around $34 per share. Back in 2009, they had revenues around $600 million, and today they have revenues of around $2.3 billion. It is a bit of a complicated company to understand because they are providing internet in space. There's also a lot of uncertainty with SpaceX launching Starlink, Amazon launching another satellite company, Kuiper. So there is a lot of competition and a lot of interest in this industry. I'll definitely plan on doing an individual video on this company because I do think it is super interesting. If you guys have not already realized this, I do actually own a part of this company as well. I initially bought shares at around $34 to $35 per share. Also, just to let you guys know, Klarman does own around 24% of Viasat. He is heavily invested in the future and success of Viasat. And the next company we're going to discuss is ViacomCBS. If you guys have watched some of my previous videos, you do know that I have done research on ViacomCBS. This has been the income statement and the balance sheet videos. I talked about ViacomCBS and compared it to Netflix. And if you actually look at it, the return on capital, earnings of Netflix and Viacom are relatively similar. Netflix actually has a market cap of around $200 billion, and Viacom actually only has a market cap of $18 billion. The main reason for this is that Netflix is obviously the new disruptor in the industry, and Viacom is an old player in the industry. And Viacom, a large part of their revenues is actually decreasing slowly because cable is slowly dying. There could be potential for Viacom to turn things around with their new streaming service, Paramount Plus. He started buying Viacom in Q4 of 2019 for around $37 per share. He then bought more, he bought around $14 per share, and then recently in Q2 of 2020, he sold around $3 million. So his average purchase price today is around $31 per share. And if you have noticed, some of these companies, there are some, clouds of uncertainty around them, and that's what makes their share price reduce today and could potentially be good investment opportunities if these clouds of uncertainty go away and the companies do end up being successful. Klarman has said that he will be buying what other people are selling, and he will be buying what is loathed and despised. So he buys companies where there is some clouds of uncertainty, the market doesn't like them because of certain reasons. He hopes that his assessment of what the company is actually worth is correct and that the market is actually wrong. And the last thing we're going to discuss is Klarman's purchase into Pershing Square Tonite Holdings. So Pershing Square Tonite Holdings is a SPAC owned by Bill Ackman, who's another famous legendary value investor. And what this SPAC is it's essentially a blank check company where they're going to use the money that they've raised to either merge or buy a private company. By doing so, they're actually taking this company public. If we look at their website, we can actually see a bit more details about what it is. So it's a $5 to $7 billion blank check company. So what they're doing is they've raised money from investors, and Klarman is one of these investors. He put around $400 million into this company. And what they're going to do is they are seeking to acquire or merge with a company that is a high quality IPO candidate. They want to invest in a simple, predictable, and cash flow generative company. They also want the company to have formidable barriers to entry, limited exposure to market factors like the general economy. They want the company to be able to do well regardless of what's happening. A large capitalization and an attractive valuation with exceptional management. So these are really the principles that Warren Buffett also follows. So they actually haven't bought a company yet. They're in the process of buying a company. We don't know which company it is, but by buying these shares in the SPAC, you're essentially betting on Bill Ackman and his ability to find a great company that can generate good investment returns. There have been a lot of changes to the portfolio. However, I've only covered the top 5 or 6 holdings because these do represent the majority of the actual portfolio. And if you guys do want, I can definitely investigate some of these other companies in another video. But the main purpose of this video was just to show you guys the largest position that Klarman has and to give you a bit of insight into his investing strategy and to show you guys just a new value investor that you guys could potentially follow and get good investment ideas from. As you guys have seen from this video, I have been copying or cloning some of his positions. So hopefully these positions do work out well. And just remember, this is not investment advice. I'm just showing you guys some research that I've been doing and some of the companies that I've found by reading Seth Klarman's 13F. I'll leave a link to this website where you guys can actually see Seth Klarman's whole portfolio and see it change over time so you guys can actually investigate the whole portfolio. Thank you guys for watching. I really hope you have enjoyed this video, and I'll see you guys next time.